You're never going to change. How many times have you been told that? But in this video right here, I need you to start accepting it. If you're going to start to become better as a trader, the quicker that you can accept that you're never going to change, the better. It's going to get you on that fast train to being profitable, and in this video, I'm going to show you exactly why. Don't forget, I'm trading live on YouTube every single day now from 10 a.m. Eastern all the way into lunch. So if you want to join me as we read the market together, we make some calls and we have some fun and education at the same time, make sure you hit that subscribe button and the notify, and I'll see you on stream real soon. There's two types of people in this world. You've got your extroverted people and your introverted people. And it doesn't matter which one of those you are, it's not going to make you a better trader. Maybe you had massive success before you became a trader. You could have been anything, but I'm going to give you a ton of examples today, and we're going to start to build some theory out into how you just need to accept the type of personality you are to move forward. So if, like me, maybe you're a very, very competitive person, maybe you're an athlete. Let's take, for example, a football player, an American football player. You were drilled and drilled and drilled to watch more tape, to be aggressive on the field, to not make mistakes, to show up for your teammates, to fight until the very last play, fight until the end, get that W. Lombardi theory, win at all costs. But is that going to help you to be a better trader? The answer is no. In fact, it's going to make you a worse trader, because if you default to that football player, that football instinct, that win at all costs, that fight to the end, you're going to be fighting a trend when you're wrong. You're going to be putting more size on than you should be. You're not going to admit that you need to take the loss. And this is where most traders get stuck. You need to write down today what type of person you are, what is your personality, and start accepting it. The quicker that you can accept the type of person that you are, the better, because you're not going to change. You've spent the last 18 years, 20 years, 30 years, 40 years, 50 years, maybe 60 years and up being that person. And there's nothing wrong with it. There's nothing wrong with being competitive at all. But when you're in the market, when you're trading stocks, when you're trading equities, when you're trading anything at all, you can't be competitive. There's no room for ego, because the only winner will be the market, and you will be left very, very upset, my friends. Let's look at an introverted person, someone who's highly detail orientated. Maybe they're less likely to ask for help. Maybe they're much, much quieter, much more focused based. But they're going to need the absolute stars to align to take a trade right in front of them, which is screaming for them to buy. And they're going to be looking for reasons to not get involved. This, again, is going to hold you back. All right, you need to be getting involved in the market when it's presenting opportunities, because sitting on the sidelines is not going to get you involved at optimal entries. And what that means is you're the trader more likely to chase an entry when it's too late, and you're going to get stuck. Both these scenarios, which I've just given you, are very, very common. And it's likely that you fit into one of these two scenarios, or maybe both, dependent what mood you are, what's going on in the external factors in your life. But like I said, you need to journal this and just accept who you are. And later in the video, I'm going to show you some hacks and how you can start trading safe around your personality type. Now, you might be the person that thinks if you just keep studying, if you watch more tape, more film of the opposition, if you watch more tape of your own plays, that you will just become better and better. And to an extent, that is true, okay? I'm not saying that you shouldn't back test and forward test. Recording and journaling your trades and how you act is a really, really important part in becoming a better trader. But there is always a limit, and let me tell you why. We can backtest and forward test all we want, and we can make really good logical decisions with our frontal cortex as human beings. That's what separates us as human beings from the apes. That's how we evolved. But I tell you, once you put money on the line, your ability to make good decisions, to use your frontal cortex, starts to diminish massively. And what you actually go into is a fight or flight scenario. We've all heard of it before. Your adrenaline gland will start to release adrenaline and you won't think logically. You will instantly go into fight or flight and you are in survival mode. So let me ask you this. If you put a trade on and it instantly goes against you and you are in survival mode, what are you going to do? You're going to do one of two things. The first one is you are going to fight it, which means you're going to double down, triple down, keep adding to that loser until you hope it becomes a winner. But hope is not a strategy. And in all reality, you're much likely to lose and lose big, much more than you were willing to lose in that first place. The second scenario is you've put that trade on and it's gone against you, but it's not at your stop loss yet. And you choke the trade and take it off before watching it go back past break even, hit 1R, 2R, 3R, and go green on the day. How many of you have done that? You've put a trade on and you've taken it off instantly only to watch it hit your target price. And at the end of the day, you're sitting there thinking, God, that's $1,000 I could have made. And instead, I just took a $200 loser. We've all done it. We've all done all these things I talk about today because we're all humans. We all share these emotions in common. So what's the hack to fix all this? Well, like I said, first, you just need to accept who you are. You're great. There's absolutely nothing wrong with who you are. But to some extent, there is something wrong, and it's insanity if you keep doing the same thing over and over again. And chances are you are doing that if you're watching this video. And the reason for that is you think that you can adjust as a person. You think you can control your emotions, that you can get better at taking losses, at managing your risk, and so forth. But the easiest way to do this is to just be process-based and have a system. If you have a rigid system with an entry and exit strategy and you are able to execute that system time and time and time again, you eliminate so many of those decisions that your frontal cortex has to make when put under pressure. What do I mean? Let's get into the charts. Now, like everyone watching this, as a trader, I needed to admit my flaws. What were mine? I am one of those guys that will fight. I will fight to the end. I will fight for my friends. I will fight for what I believe in. And that often means I could have a bias in the market. What does that cause? That causes irrational thoughts where I'm fighting trend, and it gets me in trouble. So I created my Flow Zone Momo system to stop that. It's color coded, it provides signals, and I only trade with the trend that is presenting itself in front of me. It's as simple as that. But you don't have to use my system. You can use any system you want. Maybe you are going to be an opening range breakout trader. The only trade you are going to take is a 5-minute opening range breakout or a 15-minute opening range breakout. But what you must do is have a fixed risk reward. And it can't just be in terms of RR. You can't have one day where 1R is $300 and the next day where it's $1,000. You have to be consistent. So maybe, for example, you're going to risk $200 a day and you're going to look to make $300. So each trade you're risking 200 and you're going to make 300. That's a 1.5 risk reward in your favor. And you can add more detail into that. For example, when you hit 1R, you move your stop to break even. That mitigates risk. You're protecting yourself. And if you're getting in the habit of doing these things, you're going to take more profit more regularly, more frequently. Now, what are the flaws to this? You need to understand swing points. Of course, the market is always searching for liquidity. So you need to use the right contract size based on those swing points, but your risk reward has to be steady all the time, and you need to track and base this. And as long as you accept that risk, if you are getting into trades and accepting the risk that you are putting on the line, you're going to be okay. You should never be risking too much. You should always be comfortable in a trade. $200 risk on something like a 50,000 account is absolutely fine. Risk $200, look to make 200, 300, 400 and more. But don't oversize. Don't start risking $500, $1,000 a trade, because you're going to be out the market before you are even ready to be in it. Give yourself a chance to play the next day. It's really, really key. This is a long game. The hare won't win. The tortoise always wins. Be systematic. Be systematic in how you enter the market. And just as importantly, be systematic in how you exit. You shouldn't be taking a trade if you've got an entry trigger without knowing where your stop is, without knowing where you're exiting. The exit is arguably more important than the entry, because if you don't know where you're getting out, why are you getting in the first point? So let me show you with my system. This is my Flowzone Momo system. I only play trend. So I'm looking for signals, and ideally when the market is in alignment of bearish or bullish trend. But I will take trend reversals if it tells me to take it, but I will always respect the risk on the table. So this is coming into some price action from this week. Now I'm just going to show you, this is the open. Okay, we're at 9:30 candle, and I've got nothing to do right now until I get a signal. I'm looking at market conditions. So I'm either looking for trend alignment, or I might be looking for a potential reversal for a bearish signal to take it down to the lower time frame algo, and then we can see what happens. So let's wait and see if we can get a signal. First of all, a push up. This is creating the first lower high, lower low. So in terms of structure, I'm now thinking that potentially I get a bearish move. There's the drive down. Here is your pullback inside. So the question at this point is, can I take a short, and what is my risk reward? So here is a drive up. I have a trend bear, a sell signal. We have a lower low, a lower high. And what is my risk reward? Okay, so can I get a 2R trade or more on the table? Let's move that to 2, which will take us to just below VWAP. So I tell myself now, I'm happy putting 2 contracts risk on here. I'm risking this high up here, and I'm looking for a drive down to 2R. That's it, as simple as that. If it takes me out, so be it. So stop loss up here, and TP1 down here. Very, very simple. I've accepted the risk on this trade. I hit my TP. So you can see in 1 minute, I hit that first TP. Now we're coming back to a re-entry here after a new break of structure to the downside. All right, here is our new break of structure. Here is our new swing point. So I'm thinking about the same thing. Can I get the same trade on? Because I'm going to take this trade every single time it sets up. Otherwise, I'm reverting to that introvert personality, and I'm not taking a trade that's in front of me. You might have 3 losers in a row, and that 4th trade sets up, and that's the winner that you need to get green. So you need to be taking these trades as they set up in front of you. These are not randomized trades. These are set trades that I'm looking to take. And this time I'm risking this high, and this would be 2R. But on this occasion, I might take 1 off at 2R, but I know if I get a break of structure here, which we should do if we continue downtrend, I can potentially hold a runner. So again, I'm going to enter 2, stop loss moves above the swing high, Okay, and I'm going to put target further down, and I'm going to manually exit this time. Unfortunately, on TradingView, on the replay, I cannot do an exit for you. So we're going to see if we can hit 2R. Here's our first one. So I'm going to buy one back. And now, because we're at 2R, I'm going to move my stop, break even, and I'm simply going to give this a chance to run for the day. So I'm going to take this off, and I'm going to trail my stop down as we move with momentum, locking in as much as possible with momentum. So now I'm going to protect at this high. No matter what, I'm going to make sure I'm green on this trade. We're looking for a new break of structure, just like that, so I can move it down a little bit. New break of structure right here. So now you can see I'm more than 2R into the trade, and I can be aggressive here to make sure I'm locking in. I'm sticking to my system, and if it takes me out, so be it. This is how you can avoid all the mess, the noise in your head of trying to fight it. You have to put the trade on, and you have to be willing to lose when you put that trade on. You can't get into the market thinking every trade's going to be a winner, because it's not. So I implore you today, start using bracket orders. I finish every single video talking about use hard stops, and this is exactly why. If you're trading on something like NinjaTrader, you should be able to use bracket orders. You can have a set risk reward. Maybe you're going to risk 30 points, for example, on the NQ, and you're going to look to make a minimum of 30 points profit. You can even set a trailing stop to move break even once it gets to that 30 points. Once it gets to 60 points, maybe you're taking a partial. Maybe you're moving that stop to 1R. There's so many possibilities. But if you start to become rigid in how you trade, if you start to become systematic, not only on your entry model, but also on your exit model, I promise you, your curve to success will start going parabolic, because you only need one or two of these trades where that runner goes for you to work in your favor. As long as you're understanding what risk you're putting on the table and what your exit is, being just as important as your entry, you are on the road to success. I know that's a bit of a different video today, and I don't need you to use the same system as me. You can have such a simple system. Maybe you're just playing breakouts. Maybe you're playing flag breakouts. As long as you understand that risk reward has to be the same every single trade, you have to be willing to lose the same amount of equity every single trade to make a set amount of equity every single trade. So not every trade is the same. Some trades you might only need to risk 5 points, which means you can use slightly more size. But then you're still going for 1R, 2R, 3R. And other trades you might need to risk 40 points, 50 points. It all depends how you're trading, which means you need to size down. Both those trades should be risking the same amount of financial equity. I really hope this video starts to sink in for you. I promise you it will make a massive difference to your trading, because once I set up a system for myself and I made myself stick to it, everything got easier. Until next time, use hard stops.